Good morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday. Hope everybody has a safe and nice weekend. Looks like early next week, temperatures are on the rise, so across the Midwest, which will make everyone feel better. The 6 to 10 day outlook, though, calls for above normal rainfall. So we'll see, number one, does that replenish soil moisture levels going into spring planting? Number two, does it delay some spring planting? Number three, does it bring some moisture down into the southern plains? Number four, the rains will miss the northern plains. So there's talk about parts of the Dakotas and Montana that's very dry right now. So we'll see if they get some rain. Our forecaster says that by the middle of April, conditions there as far as rainfall should improve. As far as news overnight, China came out with new policy talking about putting 122 billion yuan into stockpiling edible oils. Talked about increasing corn acres. They raised the minimum price of wheat and rice. They are going to try to secure research for animal and plant breeding. They are going to rebuild their hog herd and looking for GDP to be around 6% growth. U.S. dollar is making 3-month highs after the Fed chairman comments yesterday, and it's offering a little weakness to the stock market after yesterday's sell-off. And we noted that oil share right now is at a new high as far as the percentage of the crush. The China soybean and soybean oil markets are higher, and palm oil prices are also higher. And we noted that sun oil in both Argentina and in the Black Sea is making new contract highs, and there's talk about Ukraine importing Argentine soybeans for the oil. We also noted that there is a little concern as far as nearby corn spreads are concerned that China's only exported 38% of their total corn commitment from the United States. Still, I think they will take this corn, and I think that most commercials feel they actually will import 30 million tons of corn this year versus the USDA's guess of 24. Argentina dropped their corn and soybean crop ratings, but not their crop numbers. So when we look ahead at the March 9th USDA report, we're not expecting a lot of changes. The average guess for the corn carryout is around 1470 versus 1502, beans 117 versus 120, and wheat 839 versus 836. And not a lot of changes as far as South American crops are concerned. USDA might want to wait to make any changes until after the March 31 report, and possibly looking more at the harvest data out of South America. It's interesting to note that some people that talk to fund managers say that on March 14th, they could come in and add to their long positions in corn and beans in front of the USDA's March 31 report and in front of our spring weather conditions. We also note from the wheat market, we are in a carry in futures, Black Season inverses, so we're still not competitive on the wheat export side. And when you look at new crop, their prices are lower than us. So choppy trade going into USDA report, going into spring weather and South American conditions. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like yourself would like to be treated.